Welcome everybody to the 40 Finance channel. Today we're talking about the TQQQ. And if you're not familiar with this one, it is a 3x leveraged ETF. The whole point of it is to mimic 3x the return, whether positive or negative, 3x the return of the QQQ on a daily basis. And that's the key there, a daily basis. So I've done several videos on this particular ETF over the past. I've held it long term. I've bought it at the worst times just for experiment's sake to see if I could, bring it back up to par over time. And for me personally, I'm very confident that you can hold this as a small portion of your portfolio and make some pretty good money over the long term, but you have to have some safety marks set up, right? You have to have sort of a strategy. And with what we're seeing in the market right now, at least over the past 2 or 3 weeks, this is the type of opportunity that you're looking for, whether it's with the TQs or any other kind of leverage play. But we're going to kick things off and look at the TQs today, and I'll try to show you why it's a good time. Yes, the market has went down. There's some common sense to all of this, and I'll show you some of the levels that I look at myself that indicate that it's a good time to at least buy some shares of the TQs if you plan to hold them for the long term. All right, quick channel plug before we get started. As we go along today, you'll see a ton of screenshots from Seeking Alpha Premium. This is the one product that I kind of promote from an affiliate standpoint. If you are interested in learning more about this awesome stock research platform, my affiliate link is in the description. Gets you 7-day free trial as well as $30 off your first year. All right, so let's dig into some of these signals that we're looking for. And to do so, we are going to look at the real QQQ. And to me, this is just a little closer to the source of truth, so I always kind of look at things from the QQQ lens. Remember that the TQs are very volatile, so if you want to get a feel from like a market standpoint, in my opinion, it's just better to go to the real source, and that would be the Qs themselves. And you can see the one-year chart, the big dip that we've had that started on February 19th, and if we just go year to date, all the clamor and everything that you see on CNBC and people make videos about the stock market crash, year to date, you're only down 6%. So while this is an exciting time, we haven't seen a drop down like this since last fall. You do have to put it into some sort of perspective that it's far from a crash. It may not even be an official correction. I'm not sure if they've designated that on the news yet or not. Now, the first thing we're going to do before we dig into charts is just kind of eyeball these momentum indicators. Most importantly, the simple moving averages is what I use. There's people who use all kinds of averages to get to the same place that I'm going. And Seeking Alpha makes it super easy for me because they have this moving averages segment where they just stack everything up. And the most important thing we're looking for is red. So in this case, you've got sort of a flush, right, of 4 red aces, if you will. The 10-day, not as important to me, but I do eyeball the 50 and the 200. And in both cases, the stock price for the Qs is under the 50, it's under the 200, it's under the 100. You're well inside death cross territory. So we can feel pretty good that this is not just a one-day flash crash. We've lost a significant amount of momentum here with the QQQ. All right, next I want to check the RSI, Relative Strength Index. And to do that, at least on Seeking Alpha, I have to add an indicator to the chart, which I'll do here. And for Seeking Alpha, the way that you see this purple area down here below, by default, they stack it up as a 70-30 spread. So if you're looking for outliers, just know that this is a 30 down here. I'm going to switch this over to the past month. And this is a 14-day RSI. So again, there's people who are going to have different formulas for this. But for the sake of this video, I'm just going to leave it at the 14-day because that's the default. Some people go 10, some people go 7. I don't personally think in this case that it matters a whole lot because we're in an obvious downside. We've seen a handful of great days. So February 21st, you were under 25, and that's a really good sweet spot, even though this range here is 30. When you start to get to 25, you have some real negativity going on. So on February 21, it was 22.59. It's probably too small for you guys to see. Then on February 24th, it went under 20, which is sort of a screaming buy in that particular area. And if we skip ahead to Feb 25, you were at 15 on the close. This doesn't even talk about intraday, okay? This is open close. So you had 15 and you had under 20 on Feb 25. Let's just say you're on vacation and you missed that whole thing. Or if you were me back on those February dates that we just looked at, you're still a little suspect if we are in a downtrend. You know, things bounce back very fast these days with all the algorithmic trading, but you see what happened afterwards. And this is one of the big things we're going to talk about here, is the fact that you have to be able to buy throughout this whole thing. But you really have to be careful about going all in if you don't have a ton of liquidity, because you'll buy up here, you'll spend everything on one day just because you see an RSI, and then when you're out of money, things keep going down. So the key to the game is being able to allocate for yourself what is a comfortable level, and you're looking for more opportunities to buy in the future. I mean, look at the Qs here, just on this 1 month chart, how far they've fallen. And if you were going to say 25, under 25 only, you basically had, I don't know, 4 or 5 trading days off the top of my head on this very small chart. And I just flipped the chart to a 1-year view because I wanted to point out what the other side of things are. There are people who will sell out or sell some of their shares if RSI reaches over 70. So in that case, you had a 70 on December 16th. I'm just going to pick the most obvious ones. July 9th, you were up into almost 80s on RSI. And then on, it looks like June 17th, you actually closed above 81 on the 14-day RSI. Those would be times when you'd have to think to yourself, do I want to get out of this a little bit? Do I want to take a few profits? You probably had 10 to 12 days just from this view since 2023 where you would sell the TQQQ if you're following above 70 on the RSI scale. Okay, now a couple things to consider with hedges. These are just my ideas. Other people have other ideas. There's some people who invest in TQQQ and they balance it with some sort of treasury ETF, with the short concept being that when interest rates are on high, the stock market doesn't do as well. But one thing that I was considering for myself was the Schwab Dividend Equity ETF, and I have no ties to them whatsoever. And what makes this interesting to me, first of all, it's all U.S. companies, so for me, that's what I'm looking for. But the price alignment with shares of TQQQ, which is at whatever, $60, like there's some price alignment there. So you could, in theory, anyone could do the simple math, right? Like if you really wanted to hedge 50-50, you can compare these numbers, and if you bought TQ today, you could buy 2 of this, and with that, you're going to get a dividend. And just for kicks, I pulled this up, which is the regular Qs versus this SCHD, and year to date, SCHD is kind of holding its own. Looks like it's been up 0.05%. The Qs, meanwhile, have been down about 7%. And so the win here would just be, regardless of what the market does, you're guaranteed to get some dividends. I don't know if it has the yield. Okay, so trailing 12 months yield, 3.64%. don't know if they have a projection. I don't see a projection on next year. So you'll just have to, look at it. It might not be a fit for you, and that's okay. Doesn't matter. But you need to think of something that could potentially pay you while you're working on this TQQQ portfolio. And this to me was one that just seemed to line up, at least from a price perspective. All right, so brass tacks, is it a good time to buy TQQQ? All of the momentum and RSI indicators that I historically look at are all saying yes, and they've been saying yes for a couple weeks now. I think the most important thing to keep in mind, particularly if you're young or new with jumping in on this one, is you have to have liquidity. You have to have reserves. You have to be able to buy as it takes these different legs down. If you just go all in on your life savings right now, it's risky, very, very risky. You want to be able to manage the volatility over time. All right, guys, if you have any questions about the TQs or any of those other things I showed you, make sure you post them in the comments. Don't forget to check out that special offer for Seeking Alpha Premium down below. Hope everybody's doing well. We'll see you on the next video.